Hi everybody, welcome to another update on the stock screener. People have been bugging me to make a video on monument mining, so I will do that. This was a post from June. I said that this is going to be an easy double, triple, because they are making money and net liquidity is rising. So this is how I envision it, with more to come. So the upside is going to be like this, and lo and behold, we got a massive spike up. So prediction is coming true. So let's take a look at the fundamentals. Where do we start? Let's start with this chart. So this is the market cap, and this is the 5 times EBITDA chart. And you see this spike? This spike is because the fundamentals improved a lot. So we saw the grade going from 1.5 to 2.5. I have never seen such a rise in grade ever, 1 grams per ton higher. So this is why the chart is spiking, and there's still upside. So with my calculations, currently at 45,000 production per year, with an all-in sustaining cost of 1,200, we get 5 times EBITDA at 200 million. So this market cap has a long way to go. So this can easily double, at least double, to get to the valuation. If the fundamentals stay the same, of course. It could be that the grade goes back down once they mine the high grades. But okay, so I have used these numbers now. 48,000, maybe it can go even higher because they are not at capacity yet. They are not at full capacity yet. So maybe the best is still to come. Mine life, I have taken 1, 2, 3, 4, 5, 6, 7, 8, 9 years. Probably it's going to be more than 9 years. It could even be 14 years, but let's be conservative. Okay, you see the production. This is the all-in sustaining costs, about 1,200. When you do all the calculations, you see that we are at a PE of 2. Very cheap at the current gold price. PE of 2, so plenty of upsides, at least a double from here, maybe even a triple. And this is Murchison. I have not even calculated how much upside that will be. I kept it at 11 million US dollars. But it could be higher if they bring it online, then probably you will see even more upside. Okay, let's take a look at what the production was. So latest data was 83% recovery, which is the highest ever. So they're doing really great. Recovery up because the grade is up, of course. Higher grade means higher recovery. 2.5 grams per ton, very high grade, never seen this grade before. So production was at 4,000 per month times, yeah, this is production ounces, 4,000 per month indeed. So that's almost 50,000 per year. Then here, ore processed was 60,000, which is below capacity because capacity is 85,000. So they can still increase the capacity. This is how much percent is this? This is this divided by this. So they are currently at 70% capacity. They can easily go to 100% capacity. 60,000, they once were at 77,000. So once the fixes are done, I'm going to see an even higher production number here. Okay, so cost could come even lower. This is how it looks like in the chart. So production went down in the previous quarters and then it shot up. It actually just doubled production. Production doubled. This is amazing. And how did it double? Because the grade went up by 1 grams per ton. Recovery went also up from 70 to 83. That's an improvement. And here, even the ore processed has gone up, but it's still not at full capacity. So there's still improvements possible. All-in sustaining costs about the same. That can also improve once they get to 100% capacity. So this is not the end. This is not the end. This can even go higher. Maybe even to 60,000 if they actually go to 100%. So maybe it's even lower than the PE of 2. PE of 1.5 is possible. Let's say 60,000. PE of 1.5 is possible. So I'm holding Monument Mining shares and will probably wait for at least a double to sell it. So I'm not going to sell at this price. Plenty of upside is still there. Yeah. So let's just wait for the next quarter. Maybe it's even better. So that was the upside here. I mean the update here. This is still going to happen. Let's take a look at net liquidity. So we are currently at June. Yeah, we're only at June, so we still have 2 quarters to go. 2 quarters to go with at least, well, at the current gold price, it's at least 4 million per quarter in profits, maybe even more. So still 8 million or 10 million to go for this year. So this is going to rise by 10 million, from 10 million to 20 million. Yeah. Actually, this is the row. I see that there is 10 million per quarter upside. Okay, so 10 million per quarter, so another 20 million could be added this year. Is that correct? 10 million per quarter in net liquidity. That's a lot. Let's check. Is that not a bit too much? So 48,000. 48,000. Yeah, 30 million is possible per year. So divided by 4, it's around 8 million US dollars per quarter that can be added. Yeah, about 8 million. Maybe 10 million is a bit too much. But I took 10 million because they are not at full capacity yet. So if they actually go to full capacity, it could be 10 million. So 10 million per quarter, 20 million added the second half of this year. So the liquidity will go up like this. Amazing. And then next year, the same and the same. So you are seeing this is becoming a cash cow. In a few years, the amount of cash that they have is higher than the market cap. 100 million US dollars. And what's the market cap now? The market cap now is 60 million. So amazing. It's going to be half times book value in a few years. So this is an easy, certain double, in my opinion. If you just hold it a year or so, this will double and triple. Okay. So that was the update on Monument Mining. We are just at the tip of this iceberg, and they are going to be mining even higher grades here at depth. Maybe even go underground at some point. So yeah, this thing is ready to be mined out. Okay, that was the update, and I'll see you in the next video. Bye.